this computer. All right, let's go ahead and get started. Fredo's a hype beast, yes. Yeah, so last week, let me count these days. Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday. We were here, right? And I told y'all that we would more than likely see a reaction off of this candle here, right? This is pretty textbook. It didn't fully reach the open. I didn't like that. Like, it was too close for me to consider it like a tap. So that's just either either that wasn't played off correctly, or this will probably revisit it once again and then it continue down, or it'll come higher, right? But anyway, this is what I wanted last week, right? This candle took out liquidity at previous highs, took out liquidity, buy orders stuck here, looking for the reaction. We didn't get it, even though it looks like it touched it, but it really didn't, right? So just to clarify that, right there. Right, it didn't touch it, unfortunately, right? But then I showed you guys on that 15-minute, this is a chart that's on the Google Docs document. Wait, let me show you guys that I actually put that in there. So, Visionaries, Zoom recording, it isn't here. Right, so I did put, in the extras, I put in all the trade talk information, right? Yeah, I remember the channel I used to use where I used to put a bunch of I would just talk my mind and just, or I don't know, talk shit to a certain extent, right? This is where I put everything, every note, and then I put every significant chart that was in there, so y'all can check that out. And there's also this here, right, which shows a ton of basically previous markups, right? A little smaller description, EU distribution, accumulation distribution, swing trend shift, intraday continuation, intraday continuation, intraday continuation, et cetera, et cetera. So if you guys can edit this, please don't edit this, because if we lose these charts, I don't have them anymore. So hopefully you guys can't edit them. But yeah, no, y'all see that I have a ton of info in there, and then the trading plan, blah, blah, blah. But yeah, I showed you guys there that DXY was basically this is a schematic too. I don't feel like doing the color, but right. 1, 2, we didn't spring, LPS 1 and LPS 2. Right, we didn't get to fully spring. Right, this is what I wanted. But we didn't get Schem 1. Right, but I think EURGBP did do it. And we'll look over that in a bit. But obviously we didn't get that pricing that we wanted. But now it's very confusing to try to see the direction this wants to take. Like, I feel like we need this week's closure just to assure that, just because the thing is, this looks super impulsive, and I know that I said we could potentially finally see death if this is your actual spring, but the thing is, we have touched, right? We've touched the open, right? And we've already reacted off of the open. But like I tell you guys, just because we get a reaction doesn't mean we get a follow through, when in reality this could have just been a mitigation play from the open of this sell to buy move, right? So this could literally just be an accumulation of buys to continue higher, right? I don't know. It doesn't really matter to me which one happens, just because I'm not in any EURUSD trades. But there's always the possibility that we can get 50% of this, right? The same buy to sell candle I've been telling y'all forever, 100.44. And when we go into a weekly time frame, right, what we notice is that you can, to a certain extent, consider this candle here buy to sell, just because there's potential bullish orders that could be accounted in that. Yes, this didn't take out liquidity, but it is the last bullish candle to a very impulsive short move, right? Sell move, right? So that's the only reason I want to consider that. And also because it's literally right above the 50% of that monthly sponsored candle, right? And even after that impulsive move that we got, we didn't break, our structure, right? From an intraday time, yeah, we did break our structure, right? The 4-hour lows that were on there. But the thing is, we never broke significant lows. So therefore, structure is still bullish, right? And then also we do have this very bullish candle 2 weeks ago that just showed strength in buys still, right? And the fact that we haven't come off very strongly to the downside signifies to me that this isn't a buy to sell move. This more could show me as this being a sell to buy and then correction to continue higher, right? So this can take both routes. I just honestly really want to see what closure this is going to be, because if we get this closure, we're more than likely going to go higher. If we get some weird closure, then next week will probably be very boring. But just the fact that this can continue higher is, I feel like it can happen, and it'll give us positive swap on all USD pairs. So, I'll gladly swing this to the upside. And also something to note, right, is on my trend line, I have price range, bar range, and date time range, right? What does that show me? It shows me how many bars in length this is, right? And it also gives me that percentage increase. Like in this move, we rose 4%, right? So let's measure every impulsive move or every upside move to say, right? That's 4%. That's 4%, right? That's 3.5%. Okay, it doesn't do it for that one. All right, so these two were 4%. So this last move was also 4%, right? So every impulsive move to the upside ranges in a 4% increase in price, right? So even if we take that, the smallest one, which is 3.5, if we were to measure that and predict price afterwards, that 3.5 will get us well into that range of this potential sponsored candle. And if we even take the 4%, right, it'll reach 50% of that candle, right? As you can see. I wouldn't care honestly if this goes up. I would like it to, especially if we get this weekly closure, if we get some sort of pullback to under the closure of this week's candle, and then we take this to the upside. And by that I mean sell EURUSD, buy CHF, etc. That would just give you a bias for dollar pairs, right? Even though I say that most of them don't really correlate it besides EURUSD, right? So by that I mainly mean EURUSD sell. So yeah, other than that, this week's been boring for DXY, as you can see, extremely boring. Right, so I don't even want to talk about EURUSD just because this could be showing bullish signs, but I'm not really too sure on what this wants to do until the end of the week. So I don't really want to touch that. AUDUSD is an interesting one, right? So I missed this sell opportunity that I would have wanted, like I think it was yesterday, right? So when we're looking at this from a 4-hour perspective, this is, I'm pretty bullish on this. Why? Just because I told you guys, like, I gave you guys that whole markup. It's in somewhere in the drive, right? The whole markup between here on understanding how volume has shifted, liquidity has been taken, blah, blah, blah. Right. So now let's just zoom in and see what we see. Right. We see that basically this is where the sell pressure started to take out the previous low there, right? And why is that significant? Because that took out previous buy-side liquidity, and it basically took that out to then create an impulsive move. So you want to put basically your first potential entry at the open, next at the 50%, right? And I remember a couple of weeks ago, I told you guys this was a pretty big stop loss, right? 30 pip stop. I'm never doing 30 pip stop on AU, right? Just because the risk reward then would literally be max 3-1. So I remember we got I explained to y'all some sort of entry. It was in a previous webinar, and that was like a 4 to 5 pip stop, I think. And then you take this up for like 90 pips, right? But anyways, right, notice that in order to reach here, right, let me do this. Prior to this move, we see relative equal highs, right? I mean, relative equal lows, I'm sorry. Regular equal lows, right? AKA double bottom quotations, right? Your double bottom, right? That's what people see. Obviously, we aim to take those out before we go higher. Oh, hold on. Plug in my computer. All right, we're good. So, right, we aim for that, and what happened? Right, price came in with the open of this area, and then basically rejected and flew, right? So that just shows y'all that we always aim for liquidity to be taken, because usually when liquidity is taken, it's obviously aiming to account for previous orders, and that's the type of, plays you want to get into. And so now what we see is this is the candle that took out previous buy side liquidity, and it came back to tap the open of that candle, right? As you can see to the T, right? Literally basically zero drawdown for over 100 pips, I believe. Yeah, 150 pips, right? Cool. So now that was a very impulsive 150 pips. So we obviously have inefficient pricing left over all around here. Now, whether these are valid, right? You guys know how to check those. Just zoom into smaller time frames. So due to time constraint, I'm not really going to do that. But anyways, we see a ton of inefficient pricing. Right? What do I mean by inefficient pricing? It means voids in between wicks, shows skips in liquidity, and that there's an uneven ratio between buy and sell orders, right? And obviously it's algorithm's job to basically account for those, right? So anyways, right, I expect all of these to be filled. Most of them have been filled. This one was filled to 50%, but I can still see this one being filled to potentially come back into this candle of interest. Right, and then we take this, to the moon. Right, now how do we get there, right? Like, obviously, I would personally take the opportunity to take this 80 pips before we take it for like 200, 300 pips, right? So when we go to an intraday standpoint, right, we see a very big bearish candle, right? So obviously this is going to leave inefficient pricing. So not only that, but before that happened, we see one bullish candle before the bearish move. So I would personally like to see the inefficiency fill and the mitigation play at the same time. So as you can see, we did have inefficient pricing, and then we did have a sponsored candle waiting there, and we obviously wicked that. Right. So this would have been 2 pip drawdown, and you'd currently be up 30 pips, 40 pips, whatever, right? So even if you would have had your stop at the closure of that candle, obviously you could have zoomed in for minute one price action, right? But since that happened, that's a 6 pip stop loss, And obviously your target is that 4-hour sponsored candle. Right, so that would have been 15-to-1 trade, small little swing trade, right? Even if you would have somehow gotten your stop to even 3-4 pips, right? Just due to following rules on smaller time frames, this could have been drastically increased to 15, 30-to-1, you know? And this is something where I would have probably closed a good amount of this trade and then scaled in to some sort of buy positions here, right? Just in case if they fell, I'm already in a risk-free sell trade. So you're only continuing the trend. You're not risking any money because you're risking the profit from the sell, right? So that's just good trade management there. If I would have caught that sell move back into the 4-hour sponsored candle, right? So just watch this area. We'll see. We'll see if it even makes it down here. But this is looking like it wants to continue lower. And the next one, EURAUD. This is similar setup to AUDUSD, right? So obviously we had, y'all remember this move. I remember a lot of you guys caught this move literally from the high here. Like I remember some of you caught the wick of this and then caught, I think it was like 300 pips or something. Yeah, 400 pips. I know Juan caught this move, 300, 400 pips. To obviously target the open and the 50% of this candle. Well, more than likely the 50% just because that open already played out. But as you can see, that 50% was played perfectly. And then that gave a bullish reaction, right? 300 pip reaction. And your TP should be right around here, right? So this does support the AU bias just because AU and EA are very, very correlative, but inversely, right? So what do we see here from a daily standpoint, right? I'm personally still wanting this to, to die, right? And obviously there is, signs of structure shift as in, right, lower highs. We haven't created lower lows yet, but we created equal lows. So that could be a personal target down the road. And then we do have another lower high. So obviously I do want to see another higher low so that then we can take out equal highs, right? But however, if this high breaks, then we could be looking at a bullish structure, right? If that breaks, then any sell off after that could probably be a retracement, and then you could continue this higher. Just because from a higher time frame perspective, this hasn't broken any significant low yet, right? So the sells are technically risky, but they're well worth it if the moves are caught 300, 400 pips to the downside, right? So what I see here, right, from a 4-hour time point is this buy to sell move here, right? Buy side to catch some sort of liquidity up here, right? Basically account for an order that was found here. And I know this was reviewed in a previous webinar as well. Some sort of mitigation move off of some candle up here. Actually, I forgot where that was. But anyways, I do want to see at least the open of this here. Why? Because there is inefficient pricing there, and that is the open, right? But then again, this is a pretty big stop, right? 40 pip stop, that's pretty big, I don't care if we're looking for 400 pips, 40 pip SL is way too big for me, right? So once we start zooming in, 3-hour, cool, now I see something different. Now that is my last buy move before the sell-off, and now is when we see the inefficient pricing right there. Potentially gets filled later on, right? But we start zooming in, looks even clearer now. This is probably the candle I want to play, right? Now you start zooming in. And now I get a different image, right? What do I see? I see that we have potential equal highs there, which means now I'm looking for some sort of sponsored candle inside of this candle. Why not just the open of this? Because there's wick here. Because there's wick there, I want to see something, I want to see some sort of sponsored candle there, right? And every time I see the wick be even close to the size of the body, then I know that I can zoom in to find better, better candles, right? So we start zooming in.
Hey, Fredo, can I say something about the H1 real quick?
Oh yeah, go ahead.
All right, so can you go to H1? All right, so this is actually a trade that I got into. At,
You're talking about current price? Yo.
Oh, I'm sorry, I unmuted. Yeah, I'm talking about current price.
Mm-hmm.
I have a question about the volume divergence too on the H1. So, like something I spotted last night was right there, that bullish momentum, yet the decrease in volume.
Mm-hmm.
And I also saw equal highs.
Mm-hmm.
And then that wick right there is actually where
Where
I
you
was.
caught your entry?
Yes, no, the sell I sold because I saw each one sponsored candle.
Mm-hmm. Where is it?
Um, where that wick is, like at the T, like to the T of that wick.
Right there?
Yeah, over here.
You're talking about this right here?
Yeah, that's
Mm-hmm.
that's
I
what
mean,
I
there's
got.
nothing wrong with that, bro. Like I said, like there's no reason to ever not take risks, because at the end of the day, everybody in here is learning, right? You took out those equal highs, you played that off. There's nothing wrong with that. Obviously, you got a reaction, which means there's some sort of validity to the move. But now, like I said, you get reactions, but it doesn't mean you get follow throughs,
Yeah,
right? So this is, I mean, a solid 30 pips up,
yeah.
Now the issue now for you is that this could have been a mitigation move right there, or the 50% right here. See that?
Oh yeah.
So this could have literally been, the move to continue the upside. And the reason why I'm stuck on this buy bias is because we haven't broken structure, and because I'm still looking for, higher pricing.
Yeah.
So when,
But would that volume divergence be valid on the
oh
H?
yeah, of course, yeah, yeah.
Okay.
But you're talking about the one I showed, right?
Yeah.
Yeah. It does. It just shows diminishment of volume, but the divergence though, it shows diminishment in volume, but it doesn't give you the direction, which is why you want to understand structure and price action and volume shifts on, smaller time frames,
Yeah.
because that's what's going to give you the direction. This just tells you that there's limited volume in the market. Once you start seeing it come back, that's when you're going to see a big move to the upside,
Oh, okay.
right? And then also, for some of the new people don't know this, but a lot of when I first started talking about volume to you guys, something I told you guys about was the law of effort, and just understanding um, volume, basically volume size to in comparison to, closure of candles, right? Like here you see, right, a longer wick than you see a body, meaning rejection to the upside, right? You obviously see the rejection to from here to the upside, and this looks like it wants to continue higher, right? And
Yes.
notice how that correlates to a higher volume, right? So just that volume there is telling you that this took a lot of effort to come potentially mitigate positions from that 5-minute SC that I showed you, right?
Yes.
So based off of law of effort, that took a lot of effort to happen, right? And if it took a lot of effort for it to come down, that means it could way easier. It makes it way easier for it to go higher, right? So
No.
we'll see tomorrow, and if I'm right, then you'll know why, and if not, then you know why you're right, you know.
Yeah.
But that's just showing me more bullish sign, you know, especially because this downside move isn't, um, it's not really, convincing to me.
Yeah.
But the thing is too is like look at the time, it's 9:43. It's not even London, right?
Hmm.
And that's when euros like to move and blah blah blah. So which is why I don't even trade now. Like I know y'all caught that move on UJ today, like a couple minutes ago, on yens period. But you see, like I'm not really interested in that. You know, like my trading plan says I want to trade session overlap, and that's what I'm going to trade.
Oh, okay. Okay.
So yeah. But anyways, let me get back to where I was.
Thank you.
Yeah, no worries. Let me see where we were. Yeah, it was up here, right? So we saw equal highs. So what I want to see now, right, is anywhere here, right? And I had to add a new time frame for that just because I didn't like seeing two candles. So I added the 20-minute time frame to give me some better view on this. And as you can see, it looks a whole lot better in this time frame, right? You see equal highs. Right, equal highs. You see inefficient pricing right there. You see inefficient pricing right here. But obviously this is a lot more attractive to me. So this could be my candle of interest. Right, the 50% is literally at the um, basically at the 50% of this, right? The closure of the inefficiency is right at the 50% of that. So let me put my closure there, right? And this just makes a whole lot more sense to me, right? Because there's liquidity sitting here right above this. There's inefficient pricing sitting there. There's a 50% of a sponsored candle sitting there, right? And a lot of people are trying to play off, you know, this right here. And there's a ton of people that I've seen that are like smart money traders, but they still, you know, have their SLs hit before they get the real move, and that kind of kills the purpose, right? Like you're over here saying that your style is about catching people's SLs before real moves happen, but then you still catch the SL. You know, that just shows that their style is incomplete, right? And there's nothing against them. I don't really care. But the thing is, I want to be as precise as possible. And this is how to do that, you know, understanding correlating those higher time frame candles to smaller time frame so that then you can get, you know, the real moves, right? And now that becomes a 16 pip stop, right? Best case, which is what we want, is a 50%, and that becomes an 8 pip stop right there. Right, obviously you're based off of structure now. My first target would be there. That first target is already 23 to 1 or 11 to 1, right? So yeah, and not only that, but based off of the premium discount concept, right? When you're looking for sales, you want to have a premium price, right? Let me write that down for you guys because there's a couple of people asking me about this. Um, so write this down, or you just rewatch the Zoom. Right, so premium pricing is from 51 to 100%. Right, discount is from 0 to 49%. And equilibrium is 50%. Right, so now what does this mean? Right, all this is basically a type of guide just to understand where you are in pricing. It adds another rule to me. So basically, right, whenever you're looking for buys, you want to basically have that as discounted as possible, because what does discount mean? It means you get it cheaper, right? And that's, you know, that's obviously common sense. Like premium and discount are finance terms, right? So just understanding discount means you're getting pricing at the lowest possible level to continue higher, right? Obviously, you want to buy here to aim above the previous high. And as for sells, you want to aim for the highest price possible to then kill the low, right? So all premium is the pricing between 50%, 51% and 100%, this whole range, which means that the only way I'll ever sell something is if it's in the premium range of that impulse, right? And discount is the inverse, right? Basically from 0 to 49%. And and there, right, obviously I want to have the most discounted price to take it higher. And this should only be applied to basically big impulsive moves where you just want to catch retracements to the downside. And this is, I believe, how fibs should be used. Fibs shouldn't be relied on, you know, your magical 61.8 or your magical 71 or your magical 78.6, right? Because at the end of the day, they're just numbers, and who says whatever fib is that they have is correct? You know, some people have different types of fibs. Like, let me, right? So some people, right, they'll do something like this. Where's my 76? 76. Right? So people like to just rely on certain fib levels to continue lower and have stop losses based off of other fib levels, right? I don't believe that's how fib should be used, just because why not this fib? Why not that fib? Right? Which is why the whole premium and discount pricing basically gives you that that range of how to play with, you know, if that makes sense. Like, and it also gives me the, you know, the assurance that I actually do want to take a position. What I mean by that is, like, I'm only trying to sell here, and then I'm only trying to buy here, right? Equilibrium is just telling me the balance in price, right? And as you can see, um, usually price reacts off of equilibrium. As you can see, that price loves to come back to equilibrium, and that's because price loves to be balanced, right? The market has to be balanced in order to move, which is why inefficiencies are a thing, et cetera, et cetera, et cetera, right? So I hope all that makes sense to you guys. If not, you can rewatch this, or you can just ask me about it later. But yeah, this will give me premium pricing so that we can kill lows. And because I'm still looking at this monthly bias that I told you guys about a couple weeks back. Like, I would like to see this. You know, we're almost down to the end of the month, so hopefully we get some sort of good closure to this month, and we'll see. Right. Now, remember I told you guys this quarter closure 2 months ago or a month and a half ago. So yeah, this quarter closure is also giving me, like, you know, a ton of, you know, that I want to look for swing sells because I know they might pay me off down the road. So we could even aim for 50% of this candle here. Who knows? Inefficient pricing here. Who knows? Right. But anyways, I am going to talk about one last trade, and that was the Usdcad buy that happened this week. All right, this is the one that I caught. I think it was yesterday morning. Right, I even gave you guys this chart, I think. All right, let's talk about it. If I can find it, hopefully. Does anybody, if anybody finds, like, can y'all go look for this chart that I sent?
Yeah, I think you just typed in UCAD or something like that.
Oh yeah, right here. Good eyes, good eyes, good eyes. Right, so it was here. Yeah, this is where I showed you guys. Right, so let's open this up. This was here. right? So now we open this, right? What do we see? Let me take the screen, purple. All right, right. So obviously we see diminishing volume, right? Volume climax, right? And this is where we're gonna go. Like, this is something that you guys are asking of me too, which is going in depth on Wyckoff, right? So let's go to the schematic, right? So we see preliminary support, secondary test. I mean, setting climax, automatic rally, ST1, ST2, spring, etc., 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 right? So now what does that actually mean? All that actually means is you're getting a volume shift between demand and supply and demand, right? Depending on if you're doing accumulation or distribution, right? So what do we see here? We see obviously 3 drives in volume, but diminishing volume each time, right? But notice that this is where volume is starting to give its climax. What do I mean by that? It's starting to give that shift, right? As you can see, there's buying pressure coming in, right? Selling pressure starting to diminish. It's starting to stall. And basically that means that you're creating your selling climax, right? Volume climax, selling climax, same thing, right? So you'll see how that connects. So that's giving me my first sign of reversal, right? So now obviously my second drive is going to be called the secondary test. All the secondary test is it invades the previous area of selling climax, right? To basically give you signs of, weak signs of strength coming into this, right? So now, but notice, right, we're starting to see this secondary test start, but we see volume be stalled, showing that this is creating price and volume divergence, right? Which means this is a false move. So after that, you probably see this as selling profit taking. So that's why you see, 2 impulses to the upside, right? But now this is where your more basics start to come into play, right? Notice this impulsive move broke structure, right? So now we have a volume climax, we have selling and tests. So now what we want to see is a spring to take out the newly created buy side liquidity due to the selling profit taking, if that makes sense, right? So now we want to take out that liquidity, which is what you call a spring, right? So you look for that spring, then you look for some sort of test. And then also y'all notice that I picked out 1.31963, and I'm going to show you guys exactly why I chose that. So now what do we see? Right. Let's put this line at 31963. Right there. Right. Selling climax. Secondary test. Spring. The spring obviously had some decent volume, but it didn't have, relatively very high volume. It had mediocre volume, right? So now this is something that this is the thing that I'm trying to, develop with you guys, is the whole momentum volume ratio thing, where it also involves with volume, basically the ratio between current volume and previous volume, right? So we see price give a huge impulse, aka the spring, into that 31963 area that I'm gonna talk about in a little bit, but there's no supporting volume to it, right? Like there's no selling pressure supporting it. What I mean by that is that the the volume isn't high, it's below averages of previous sell volumes, right? So obviously now you can see rejection, right? So now we dive into the smaller time frames. And now analyzing volume here, right? You see a ton of sell pressure, but price isn't continuing, if price isn't continuing, but you're seeing a lot of selling pressure, then you're starting to see a stalling in price, volume divergence. So now I would gladly take this risk, and I'm gonna show you exactly why I took the risk. I'm gonna show the candle a little bit, but basically I'm gonna take the risk there, you know? And now how do you set your stop? Now let's go back. All right, so this is the candle I think people were looking at. Yeah, right here. This one, right? But like I said, if you see wick, you want to always make sure you try to get the lowest point of that wick, right? And let me show you exactly what I did. All right, zoomed into 15-minute. Where is it? Right here. Actually, it wasn't 10 minutes. It was 10-minute. I'm sorry. Yeah, right here. Right. So this is that whole H1 candle right here. Now, notice this candle. Why is this candle valid? Because it took out previous buy liquidity, right? By taking out previous low, and then the skyrocketed, meaning that there's some sort of meaning to this move, right? So now we want to highlight open. Oh, I need to change that. That looks so ugly. Yeah, right. And literally those are the settings in case y'all want them. So %, and then the closure for stop loss numbers, right? So now you see price come right into this. Right, so this zone is 2.5 pips. Right, so now obviously we're going to go back to that 1 minute that we were talking about. So we're in the area of interest. Okay, right here. Right. The area of interest started from 3163, I think. Yeah, it was right there. Right, and price came to touch this to a T. So we just rejected that candle, and now we're starting to see price create some sort of mitigation. What I mean by that, right, literally the same thing that we saw back there, we're now seeing here. This is the last sell candle to basically mitigate that last candle from that I just showed you guys, and then it gave a reaction, right? So we're seeing a peak in volume, but we're seeing the rejection right afterwards, showing that there could be potential mitigation coming. And so now your play, I'll put 3 there, 3 pips, and then from the open, if you were to play that 50%, be a lot harder to play, but that's a 1.5 pip stop. But anyways, but for clarity purposes, I am gonna do 3 pips, right under this low. So now I am gonna take this to the moon because I did, right? So this now 3 pip stop is up 114 pips. Right, now that's absolutely retarded, you know, like you literally push buy, and like 5 minutes later you're in profit, and then 3 hours later, 4 hours later, 5 hours later you're up over 100 pips. Right, like that's retarded, you know. So that just shows you guys that was a bit of a more advanced setup, but I hope it made sense to you guys. I'm pretty sure it did.
Yeah, there was so much confluence to that. Even like with the daily,
Yeah,
you can
yeah,
see
yeah,
that
yeah.
it filled inefficiency too.
Mhm.
It's
And then
wild.
also like Remember what I told you guys about understanding Wyckoff? That's why I pulled up this picture here. Right here. Right. This is only a type of guide. Right. So you see accumulation and then you see distribution, but there can only be one accumulation and one distribution, right? Because you only have one high and one low, right? But that doesn't mean that you're always going to have one reaccumulation and one redistribution. You can literally see accumulation, impulse, reaccumulation, impulse, reaccumulation, impulse, distribution. And then, the cycle goes on, right? Or this could have even been a third reaccumulation to continue higher, right? This is just a guide, but that doesn't mean there can only be one reaccumulation, right? So now what does that mean? I remember we talked about this move literally the whole way, and that was the accumulation we saw here, right? And then we saw the reaccumulation like 2 weeks ago, right? Who's to say this here isn't another variation of reaccumulation, right? And what would prove that? The structure. Look at how corrective this looks, right? So corrections usually mean impulses, right? And not to mention that, this to some extent could be considered a sponsored candle, right? But I wouldn't play this, as this doesn't meet my rules of what a sponsored candle are. So which is why I played this, right? And even that entry would have gotten 5 pip drawdown for over 100 pips, right? But anyways, which is why I wanted to look into this wick and figure out what the 15% was, right? 50% was of that 10-minute candle. So now y'all see that. I'll for sure make a video on this, just going fully in depth, because there's still a couple of things I left out, but it's just way too much to talk about right now. So I'll probably make a video and I'll put it in pair breakdowns for this, just because this is really good data and really good, stuff. What rules? There's 2 rules. Either the candle has to take out liquidity and then have a impulsive move in the opposite direction, or, well, that's basically it. Or if not, just the last candle before a very strong impulsive move in the opposite direction, right? So there's a wick here. The candle has to take out that wick and then have a very impulsive move to the upside. Or it could have one last push to the upside to then die off. So now I want to see price come back to there. Right. So that's just a simple way of doing it. But I still need to do that video for you guys. Dojis do not count as SCs. That's a big mistake I see a ton of people doing. Like, for example, this right here, that's not a sponsored candle. You always want to see more candle than wick, which is why you want to zoom in. Which is why I have so many time frames on here, right? Like you see this doji here, that's not a sponsored candle, right? Like instead of this being a sponsored candle, I would rather consider this a move of inefficiency right here. The inefficiency there, I would consider this an inefficiency fill to continue downside. I would not consider that a sponsored candle because it didn't take out liquidity and there wasn't any impulse to move afterwards. So it doesn't meet the rule. Yeah, big body candles, yes. Like this one, EURGBP. We finally got that reaction, but I didn't catch the move, sadly. Like this right here. You see this big body here, and now you see it react off of 50%. Right. So you see big body, impulsive move in the opposite direction. So you see 50% of that. So yeah, I'm basically done. I feel like I ran it on enough. Yeah, No problem, bro. But yeah, now's when you guys can talk. I don't. Can you check oil? I don't look at oil like that. Yeah, you see, the only reason I don't want to play with this is because look at this ugly range here. Like I know this can obviously pay you guys a lot. You know, like this is still probably like 1,000 pip range. Yeah, 1,000 pip range. But I was looking at this today actually, and I'm actually kind of leaning towards sells just due to the fact of this, like due to the fact of that, right? Like this would have been a harder move to play out, but yeah. But now let's look at this from an intraday. Now the only issue with wanting to sell this is this impulse here. I know Raj caught this move here to the upside, so good job there. They're still considered inefficient pricing right there. But I can't really give a full bias on this without me having to fully check it out. But just the slow broke lows, if we can assure a lower high, this will continue lower. That's just looking at this time frame. I obviously haven't seen enough. And I could see this 4-hour. I can see this. Yeah, I can see this coming up to some sort of area around here. The sponsor candle isn't that pretty, but notice this candle took out all of this liquidity here. This one candle took it all out. So you could easily see price do something around here just due to that. But obviously if this breaks, then now you're looking at bullish structure. So yeah,
I mean,
that's not really something I'd want to play out.
yeah, that almost looks like a distribution schematic, and that could be your LPS.
Yeah, this could be your first LPS, and then this would have been your first sign of weakness here due to the breaker structure. But yeah, I don't really like that. Yeah, it could very well be distribution. Let's see. Right, that would have been your UTAD. This would have been your LPSY, last point of supply. Yeah, usually we don't tend to see continuations. Usually we tend to see full-on pullbacks, which is what I want to see. And why is that? Is because when you apply the concepts to this, you see equal highs, you see the purge. Let's say this is a candle here, right? You want to see impulsive move down, and then you want to see the pullback into that range to then continue lower. This is your absolute safest entry. But that's what you want to see. Right? If that makes sense. Sponsored candle, mitigation, continuation downside. Little stop, big TP. But yeah, y'all get that. I've been explaining that to y'all for months now. But yeah, do you guys have any questions? I feel like I covered a lot today. Let's see. Do you by chance remember which Zoom has a vid to validate imbalance? I am gonna make a video on that. Like I told you guys I would make a video on that. Hopefully I can get it done either this weekend or the next week, just because next week is when I'm gonna be doing all the course videos. Just because I'm gonna be on Thanksgiving break, and I don't really have any work to catch up on. So I'm gonna make those videos soon. Thanks, bro. Your breakdown of the market is another level. Sorry, bro. I'm noob. Yeah, bro. Like I can still go like more in depth on it. But like there's still like the reason why I haven't shown you guys everything is just because like I don't know how to explain it. Like which is why it took me a long time to finally show you guys how to use volume. Just because it's very like it's very tough to explain, which is why I wait until I'm able to explain it before I release it. But as you guys can see, this played out to a T. So yeah, who don't give no signals, bro? Right there. So that was 120 pips. What do I struggle with? Patience, bro. Patience. And also like adjusting the higher lots because I'm like $300 up and I'm like, damn, I really want to close, even though it's only like 3%. Like I'm not, I'm not no like master trader. I've never considered myself a master trader. I've never considered myself a pro trader. I think that stuff's corny, first of all. And then second of all, like, like I never want to make it seem like I have like a fat ego because I know that'll be my downfall. And then that'll be the downfall of visionaries. And yeah, nah, don't want that. But yeah, we'll see. All right, do you guys have any more questions? Sorry, bro, I'm noob. But yeah, guys, other than that, I'm done for tonight. Hold on. Sell signals? No, I would never sell signals, bro. Because I mean, you guys know why I'm against signals and all that. I've talked about it a lot. When do you load these vids up? What vids are you talking about? Are you talking about the Zoom or are you talking about the videos I'm talking about? Any recommendations with trading with trading physiology, bro? You trade physiology? That's tough. Yeah, psychology. I mean, experience, bro. Like, I mean, Sergio's on the call, right? He's been trading longer than I have, and he's made way more bread than I have. He can tell you guys about that. But yeah, guys, I am gonna have like a full-on psychology part in the course. Just because it doesn't matter what methods you trade, if you don't have the psychology, it's not gonna work out. Any recommended books? The funny thing is, bro, I don't read books. I despise reading unless it's like something that like I really, really need to do that a teacher tells me to do, or like it's something that like, has some like good recognitions behind it and it gives me interest. Yeah, bro, this is the best thing to read is the market. I don't really like reading books.
So do you listen to podcasts then?
Yeah, I prefer listening to stuff.
Oh, same here.
Yeah, bro. I hate reading. Like I'd rather listen to it while I'm in bed or while I'm in the car. How do I learn then? Do y'all seriously not believe me when I say I taught most of this stuff to myself?
Nah, bro. Like, if you don't read books, like, how do you learn? Like, if that makes sense.
Like learn what?
Like everything, cause like you're wise. Like I fuck with that. Like the trade talk. Like, how did you learn all that? Cause I feel like reading is like important.
I don't know, bro. I like sounding smart. Nah, but
The podcast.
what's it called? I mean, let's go over some of that stuff. I mean, I'm gonna end the recording now though, but we'll go over that stuff. But yeah.